Well, joining us now is Ward Nye, CEO of Marietta. It's great to have you here on set. Welcome.
Nice to be here. Thank you, Morgan.
So we've seen this. We've seen non-residential activity, big projects continue to move forward, whether it's through infrastructure, IRA. We're also seeing a lot with the data center as well. What is your sense? What is your purview in terms of how that activity continues into 2025, especially as we do have a new administration taking the helm?
I think you've got several things that will push it into 2025. One, we had a really wet 2024, so there's some backup that's on that. But if we think about the Infrastructure Investment and Jobs Act, or IIJA, that was signed into law in November of 2021. And I think people would have been surprised if they would have said we would be here in November at this point, and only about 30% of that money will have found its way into the system relative to highways, bridges, roads, and streets. So it's a $1.2 trillion deal, but only $350 was relative to hard, true infrastructure, and only 30% of that money has found its way into the system. So 70% of that is still to go. And if you think about what that means as a practical matter, much of it has to go in 2025 and 2026, because in 2027, we're likely to be in a reauthorization phase at that point. And I think with the new administration, one of the things that I think we need to be sensitive to is what will that next bill look like and how much of it is going to be driven toward hard infrastructure. As we looked at the announcement for Secretary-Designate Duffy this week, it was interesting to read what came out when his name was put there. It talked very much about just what I said, highways, bridges, roads, streets, airports. So I think we're going to see much more hard infrastructure as a percentage of this next bill. But I think we're going to see a lot of that money come through in 25 and 26. And that's just on the public side. Obviously, we have to care about the federal government, but the state fiscal condition is awfully important from our company's perspective and the nation's perspective as well.
So what are you seeing on the state side? And you just talked about infrastructure. I'm going to give you two for here. You just talked about infrastructure, but we also know that President-elect Trump has talked about clawing back Inflation Reduction Act and CHIPS Act. It raises questions. Is that even possible, and to what extent? So I guess, how are you thinking about some of those areas of fiscal spending versus what you're seeing on the state level?
I think a couple of things. If we look at those, I think a lot of the work that we would have seen has already gone under those to date. So I think we'll continue to see work there. But I think as we're looking at a lot of that, to your point, we've seen a lot of CHIPS activity. And we're seeing a lot of AI activity as well right now, a lot of data warehousing, data centers. And we think that's likely to continue. The other piece of that I think we need to watch very carefully is what happens relative to energy, because these are hugely energy utilizing facilities that are being built. So if we think about big, heavy non-residential infrastructure, and we look at the stone intensity of much of that, these big, heavy non-res projects are very stone intensive. That means a lot to our business. So is energy. So I think to your point, Morgan, if we're looking at both the public side and the heavy non-res side, most likely over a period of years, it should be pretty constructive.
So what's going to happen over the next couple of years, already baked in, as you argued? Really got to look to 27 and the arguments you're going to be making to lawmakers now. And I guess we got midterms in between now and this actually playing out as well. What is your argument for what you think the country needs infrastructure-wise this last bill didn't address?
Here's the biggest single issue. We went about 15 years with either a continuing resolution or a longer-term bill that didn't put more money to highways, bridges, roads, and streets. So we went for the better portion of 20 years without a significant investment there. And if we look at what's happened to sheer population dynamics in the United States over that period of time, it's been dramatic. And it's been particularly dramatic in states that Martin Marietta has been focused on, which is primarily in the southeastern U.S. and the southwestern U.S. And if we're looking at cities like Raleigh or Dallas or Denver or San Antonio, Jacksonville, and Atlanta, those population trends have been so significant that we need to have more real capacity added to the roads, streets, bridges that are there for quality of life purposes, but also to make sure that we can keep business moving at the pace of business. So there are two very different reasons that we need to do it, separate and distinct from the fact that we have public safety issues. If we're looking on a number of these secondary roads across the United States, that's where you see the highest rate of fatalities. We need to invest in that, and I think there's a very clear reason from a human perspective why, but I think equally from an economic reason why.